Don't make the mistake of investing in the wrong country in 2025. Some markets are about to explode, and others are headed for a downturn. Find out which countries should be at the top of your list, and which ones you should avoid. Real estate is one of the most reliable ways to build wealth, but if you're not in the right market, your investments could end up losing money. Think about it. How many people have you heard about investing in hot markets only to watch their returns crumble because they jumped in at the wrong time? It's frustrating, right? That's why, with 2025 right around the corner, it's more important than ever to take a close look at the best places to put your money in real estate. Whether you're a seasoned investor or just starting, you need to know which countries are on the verge of massive growth and which ones might just leave you with a bad investment. In this video, we're going to break down the top 10 countries for real estate investment in 2025 based on economic trends, market growth, and rental yield potential. These countries have been handpicked because of their unique advantages, whether it's booming markets, high rental yields, or attractive prices. Trust me, if you're not paying attention to these locations, you could miss out on some serious returns. Let's dive into it. Here's the thing. Many investors focus on the wrong metrics. They get caught up in the buzz around hot locations and don't look beyond the surface. It's easy to get excited about the next big thing or follow the crowd, but that's exactly how investors end up losing money. For example, in the past few years, many people have rushed into overhyped markets, thinking they would continue to rise. However, what they didn't realize was that these markets were overheating, with overpriced properties that weren't generating sustainable rental income. Some of these markets are even on the brink of crashing. So if you're new to global real estate investing, or even if you're experienced, it's critical that you make decisions based on solid research and clear trends. That's why this list is so important. We're focusing on data-backed insights so you can invest smartly and not fall victim to a market trap. Let's dive into the top 10 countries you should be paying attention to in 2025. We'll start with number 10 and move up to number 1, and by the end of the video, you'll have a clear understanding of where you should be investing. Spain may not be the first place that comes to mind when you think about real estate investment, but don't overlook it. The country's real estate market is experiencing a steady recovery after being hit hard during the financial crisis of the late 2000s. Over the past few years, Spain has seen solid growth, especially in major cities like Madrid, Barcelona, and Valencia. In addition to the growing demand in urban areas, Spain's real estate market is bolstered by a booming tourism sector. If you're looking for a place to invest in short-term rentals, Spain is one of the top destinations for tourists. With rental yields in cities like Barcelona hitting around 6 to 7%, it's definitely worth considering. Spain's affordable property prices compared to other European markets make it even more appealing. However, investors should keep an eye on potential changes in property regulations, as the government is taking steps to limit short-term rentals in certain cities, which could impact your investment strategy. Singapore has long been known as a financial hub, and its real estate market reflects that. The country's stable economy, high demand for both residential and commercial properties, and attractive rental yields make it one of the most promising real estate investment locations in Asia. Singapore's government has implemented strict property regulations, which have helped maintain a stable market and prevent it from overheating. This makes it a safe bet for investors who are looking for long-term growth. While property prices can be high, rental yields are also impressive, often ranging from 3 to 4%, which is relatively strong for a high-income country. One of the key drivers of growth in Singapore is the demand for properties from expatriates and multinational corporations. As Singapore continues to attract foreign talent and businesses, the demand for both residential and commercial properties will likely continue to rise. If you're looking for a stable, low-risk investment, Singapore should be on your radar for 2025. Mexico might surprise you, but it's one of the most exciting real estate markets in Latin America right now. Cities like Mexico City, Playa del Carmen, and Puerto Vallarta are attracting both domestic and international investors due to their affordability, growing economy, and high rental yields. Mexico's real estate market has been steadily growing over the past few years, driven by a growing middle class, strong tourism numbers, and increasing foreign investment. One of the main benefits of investing in Mexico is the potential for high rental yields. Many markets offer returns of 8% or higher, which is great for cash flow. The The country is also known for its strong real estate fundamentals, growing demand, low interest rates, and a stable political environment. The US dollar also goes a long way in Mexico, making it an attractive option for US investors. While you'll need to be mindful of some areas that have safety concerns, the right locations can provide significant returns in 2025. Australia's real estate market has been resilient for years, and 2025 is shaping up to be another strong year. Cities like Sydney, Melbourne, and Brisbane continue to see demand from both domestic and international buyers. Australia's property market is driven by a strong economy, low unemployment, and high immigration numbers, which boost demand for housing. Although property prices in major cities can be high, rental yields are solid, ranging from 3 to 4% in cities like Sydney and Melbourne. The demand for housing in Australia remains high due to the growing population, and with government policies that encourage homeownership and affordable housing, the market should continue to thrive in the coming year. One area to watch in 2025 is the growth in regional cities and towns. While Sydney and Melbourne are always in the spotlight, investors are increasingly looking to regional areas where properties are more affordable and yields are often higher. Turkey is becoming a real estate investment hotspot, especially as the country continues to grow its economy and improve its infrastructure. Cities like Istanbul, Ankara, and Izmir are seeing rising property demand from both local and international buyers. Turkey's affordability compared to many European countries makes it an attractive option for investors looking for value. In recent years, Turkey has made significant investments in transportation, energy, and tourism infrastructure, all of which have fueled property demand. Additionally, Turkey offers attractive rental yields, ranging from 6 to 9% in some cities, particularly in Istanbul. However, there are risks to be aware of, including currency fluctuations and political instability. That said, Turkey's rapidly developing economy and growing demand for real estate make it an exciting market to watch in 2025. Germany is known for its stability, strong economy, and reliable real estate market. Cities like Berlin, Munich, and Frankfurt have been attracting both domestic and international investors for years, and 2025 will be no different. Germany's rental yields are relatively low compared to other countries, typically around 3 to 4%, but its strong economy, solid legal system, and low-risk profile make it a safe bet for long-term investors. Additionally, the country's rental market is consistently in demand, especially in major cities where a growing population continues to drive the need for housing. Germany's low unemployment rate and strong job market, combined with an increasing influx of workers from other EU countries, make it an ideal destination for investors seeking stability and security. The United Kingdom is a well-established real estate market with a long history of solid returns for investors. While Brexit created some uncertainty, the country's real estate sector has bounced back strongly, and 2025 looks set to be another great year for investors. London continues to be one of the world's most sought-after cities for real estate investment, though prices are high. However, the wider UK market, including cities like Manchester, Birmingham, and Leeds, offers more affordable options with strong rental yields. The rental market in the UK remains robust, with yields ranging from 4 to 6%, and the demand for housing continues to rise due to a growing population and a shortage of housing supply. Despite the political uncertainty, the UK's strong economy, stable property market, and high demand for rental properties make it a solid choice for real estate investment. United Arab Emirates, or UAE, is one of the most exciting real estate markets in the world right now. Over the past decade, the country has seen incredible growth, especially in cities like Dubai and Abu Dhabi. The UAE has managed to create a robust real estate market that appeals to both investors and home buyers, thanks to its tax-free environment, high rental yields, and world-class infrastructure. Dubai, in particular, has become a global hub for luxury real estate and has attracted millions of visitors, expatriates, and investors. With the 2020 World Expo and subsequent events, the UAE has seen a significant boost in economic activity and demand for real estate. Rental yields in the UAE are impressive, ranging between 6% to 8% in key areas like Dubai Marina, downtown Dubai, and Palm Jumeirah. The city's rapid development, ease of doing business, and tax advantages make it one of the top destinations for real estate investment. In addition to the potential for high rental income, the UAE's real estate market is supported by government initiatives to make the country an attractive place to live and invest. New visa policies targeting investors, entrepreneurs, and professionals will continue to drive demand for housing in the coming years. One thing to watch is the regulation changes, especially with residential property prices that can fluctuate based on market conditions. But given the UAE's position as a global financial center and its ongoing infrastructure development, it's a market with a lot of potential in 2025. Portugal is one of the hottest real estate markets in Europe, and it's no wonder why it's sitting at number 2 on our list. Over the last few years, Portugal has become a favorite among real estate investors, especially in cities like Lisbon, Porto, and the Algarve region. The country's unique combination of affordable prices, high rental yields, and a growing economy make it a top choice for international investors. Portugal has some of the best rental yields in Western Europe, often reaching between 5% and 7% in major cities. Lisbon has seen significant growth in property values, and with Portugal's booming tourism industry, short-term rental opportunities are abundant. The growing influx of digital nomads, retirees, and international workers has also helped drive demand in both urban and rural areas. One of the key factors that make Portugal attractive is its Golden Visa program, which offers residency to investors who purchase real estate in the country. This has brought a wave of foreign capital into Portugal's market, driving property prices up. However, the relatively low cost of living compared to other European countries makes it an affordable option for buyers. The Portuguese government has also been making efforts to attract more foreign investment by offering tax incentives and policies that support long-term growth. If you're looking for a market with strong growth potential, high yields, and an improving economic outlook, Portugal is an excellent choice for 2025. And now, the number 1 country for real estate investment in 2025 is the United States. The US has long been a favorite among investors, and it continues to be the top choice for real estate investment. With a massive, diverse economy and a strong housing market, the United States offers unparalleled opportunities for real estate investors. Why is the US the top pick for 2025? For starters, the country's sheer size and economic power mean that there are endless opportunities across different cities and regions. Whether you're looking to invest in residential properties, commercial real estate, or even vacation rentals, the US market offers something for every type of investor. Markets like Austin, Texas, Miami, Florida, and Phoenix, Arizona have been experiencing rapid growth, driven by an influx of people moving from high-cost areas like California and New York. These cities are seeing high demand for housing, and rental yields are solid, ranging between 4% and 8%, with some markets offering even higher returns. Additionally, the U.S. real estate market benefits from a well-established legal framework that offers investors a sense of security and stability. The country's diverse economy and the strong dollar also provide advantages, especially for international investors. The U.S. also has some of the highest rental yields in the world in certain cities, particularly in the Sun Belt states where job growth, affordable housing, and population growth are all on the rise. The housing market remains one of the most liquid globally, meaning that it's easy to buy and sell properties when needed. While the market can vary from state to state, the U.S. offers a wide range of investment opportunities for both long-term and short-term gains. However, the key to succeeding in the U.S. market is choosing the right city. While some areas are thriving, others are seeing slower growth, and understanding local market conditions is essential for making the right investment choices. With low interest rates, at least for now, high demand in many areas, and ongoing growth in both the rental and property markets, the United States is the clear number 1 choice for real estate investment in 2025. To sum up, the global real estate market is in a period of significant growth, and understanding where to invest is more important than ever. We've covered the top 10 countries that are shaping up to be the best places for real estate investment in 2025, each with its unique advantages, whether it's high rental yields, strong economies, or growing demand for housing. Countries like Spain, Singapore, Mexico, Australia, Turkey, Germany, the United Kingdom, the UAE, Portugal, and the United States offer huge potential for investors. But remember, it's not just about picking the best country. It's about understanding your investment goals and what markets align with those goals. So if you're looking to make the most out of your real estate investment in 2025, make sure to keep these countries on your radar. The best time to get started is now, before these markets really take off. Want insider real estate investing tips? Subscribe now and grab the game-changing info in the description.